So yesterday was the first day for a while that we've seen panic in the market. A little bit of red. It's amazing. It's amazing what difference red days make to the market. You know, we can have constant green days or a green day of 1%, 1.5%, and everyone's like, oh, it's nice and lovely. And then as soon as you get that little red day, that red day that's kind of over 1% or 1.5%, it's amazing the difference that makes. You know, the fear is such a big emotion than green markets and greed. Massive, big amounts of emotion that can be caused by that. And you guys that went through that stock market crash last year, you saw that. You saw the big difference between greed and fear. Fear can rapidly take over and can send stocks down massively. And even just a little bit of red day today, you kind of saw the little fear out there. And that's why when we saw last year constant red day, how low that can push stock prices. And I think that today was a little bit of a reminder that, you know, you stick a couple of days of 1.5% down, and all of a sudden that fear that could be caused in the market, the fear that suddenly everyone turns around and goes, oh, could there be a recession here? Oh, them interest rates are getting a little bit too high. It's amazing. It's amazing what difference them couple of red days can do to emotions in the market, and can very quickly send a stock market from one direction to another direction. And that was just a little flashback to 2022. Obviously just one day there, but it does show you how quickly the tide can turn in the market, and a little bit of a flashback to the 2022 stock market there. Now, obviously, overall, I think the reason why the stock market was down today, or yesterday should I say, is because we've just been on such a good run. You know, it's good to have a breather. We've been up and up and up, especially, I mean, look at June. You know, if we go from June and July, like the last 2 months, before the dip that we had, you know, we're up 8% in 2 months. You're talking nearly the average return of the S&P in 2 months, basically. It's a quite big rally. And we were getting to the point where we were starting to get towards all-time highs on the indexes. We weren't too far away. We were only around 3% away from all-time highs. So we've gone up quite a lot there. It's good to have a breather. Sometimes it's good to have a breather. In fact, I would say, and some people won't like this because people only want stocks to be going up and up and up, but it would make sense for stocks to do 6 months now of kind of flatlining, you know, up and down and not doing anything. Let the earnings catch up, let the earnings rebound catch up before we start pushing to all-time highs. There's still issues out there. You know, you still look at the Fed. The Fed haven't paused the rates yet. There's still issues out there. I don't know if we deserve to be pushing all-time highs just yet. And we've been on a really good run. It makes sense for me to have a bit of a pullback. It makes sense to have a breather. I would not be mad if we saw the market pull back 3-4% right now and flatline for the next kind of 6 months. I actually think it would be very good for the market, in my opinion, to flatline for the rest of the year. I know people won't like me saying this because people like going on their accounts every day and seeing their stock market count going up every day. We've had a good year, and it would be very healthy right now for the market to have a breather. And I think that's what's going on. Now, obviously, everyone's stared at the kind of the US downgrade on the credit rating. Actually, JP Morgan's CEO, Jamie Dimon, actually came out and said it was ridiculous and it doesn't really matter. And I agree, it's not really a big issue out there, but I think the market was looking for something to go, let's have a bit of a cool out, let's have a bit of a pullback and maybe give the opportunities for other people that have not been in the market to get into the market. So not much there, but what it did mean is that where the S&P was down 1%, unfortunately what it means for someone like myself that has a little bit more growth stocks, a couple of higher risk stocks, there's someone like a King, for example, being on absolute fire this year, but it had to have a bit of a cooling off phase, so that was obviously a bigger pullback for that one. HIMS down 4%, SoFi that was actually down 2%. So unfortunately, as most of you guys probably seen in 2022, unfortunately when we do have the negative days, and in 2022 we had a lot of them, that does mean that I do get hurt a little bit more than what the market does. But it means that when we do have, good performing markets like we've had this year, the stock market is up 18%. As you guys saw when we did the challenge yesterday video, 10 stocks I picked there, they outperformed the market. So I've massively outperformed the market this year. But unfortunately, if we do ever get a red market like 2022, that's the times when I'm going to underperform the market. So that was clear that was happening again. with the stock market going down yesterday. But a little bit of context there. On to the next point I want to make. SoFi. So SoFi actually brought their earnings out, and obviously the stock rallied. We talked about it on the YouTube channel. But since then, the stock's actually pulled back a fair bit. The stock's pulled back around 10%. So realistically, the stock is kind of really up only right around about 3% really since it reported earnings down. And I thought that was absolutely bonkers. And I still don't understand how the market reacts to this. So basically, SoFi and analysts came out and downgraded the stock. This kind of took the headlines. Target of $7.50. And I was looking on tip ranks, and the amount of analyst upgrades and downgrades that was going on the day. And I never understand sometimes why this kind of builds over or has this much power over share price. Since they reported their earnings, there's been a few changes in share price. You can see here $8, $10 a buy, $9, $11, $7, $15. Obviously, this one here was the one that took the headline. On the same day, BTIG Group, as you can see here, came out with a $13 price target. Truist Financial came out with a $16 price target on the day. Jefferies came out with a $15 price target out today. Like on that day, there was 3 share analysts that came out and had a share price that was higher than where it was, and then one came out with lower. And for some reason, that's the one that gets all the headlines, and then that causes the stock to drop, 10+% after the run-up of earnings. It's bonkers sometimes, the stock market, isn't it? It's absolutely... You look at that point of view, like 4 price targets on the day, 3 bullish, one is negative on where it is right now, and yet that's the one that gets all the headlines and then sends the share price lower. It's crazy that the stock market works like that sometimes, and it can be frustrating, but I just saw that in the last kind of couple of days, and I just wanted to point out, like, this is why I don't pay attention to analyst price targets. I don't pay attention to short-term price targets, but it's mental sometimes. But earnings, obviously there was a lot of earnings last night that came out. A few that I was keeping an eye on, in particular, obviously the likes of PayPal, Shopify. We're going to talk about Robinhood as well and Mercado Libre. First one I want to point out is Robinhood. Robinhood actually is down after going up, and then it went down after hours. But they actually made gap profitability, I believe. But that's not the point. Actually, I thought the earnings weren't actually too bad. Revenue growth of 52%. You can see here they got non-GAAP EPS of 0.03. I think there was gap profitability, if I remember correctly, when it came up on the earnings when I was watching CNBC. But the point I wanted to make about Robinhood is monthly active users. Monthly active users decreased 1 million. So people that are invested on Robinhood's platform is still going down. Like, it's crazy to think that we've had this rally in the market. So many people, so many retail investors disappeared from the market then. We saw it, and then we've had this rally here, and even through this rally here, we've had still, retail investors not come on board. And also makes me believe that we still aren't kind of like in a euphoria market. The fact that someone like Robinhood is coming out and saying they're still seeing monthly active users decrease, but yet the market's been doing this, kind of says to me we're not in a euphoria market, where everyone's kind of, it's like the gold rush. Oh, look, stocks are only going up. Stocks are going absolutely crazy. Look at the money that I made in stocks in 2023. We're still not seeing that. We're still seeing the pain and the hurt from retail investors in 2022 still really affecting these accounts, which I thought was really interesting to see. So I just really wanted to point that out, that we're seeing the money still coming in very heavy from the institutions that have been on the sidelines, but yet the smaller retail investors are still not getting brought into the market at the moment, or seems to be on the sidelines anyway at the moment. But yeah, overall, I looked at Robinhood's earnings and thought they were quite interesting. Good amounts of growth. Going to a profitable platform. Might have a little bit of a look in that one in a little bit. PayPal brought their earnings out, and I've got to say, unfortunately to me, this seems like one of those where this kind of negative tone comes out in the market, and everyone kind of has a bit of a sit back and kind of sells everything off a little bit. These are the worst days to come out with earnings, and it seemed like that massive. I mean, I was looking at Robinhood's earnings and I thought they weren't that bad, and then the stock was down. I was looking at PayPal earnings, and PayPal was down, is down 7% after hours, and I was looking at PayPal's earnings and I was like, okay, you come in online on EPS, revenue, you beat the revenue. You're looking at all the other numbers, guided a little bit higher, increased your buybacks to $5 billion. I was like, the solid earnings really. You know, a good 7, 8 out of 10. I've not gone through all the numbers yet, so I'll do a bit of a deep dive on the Patreon and do an earnings review of, you know, all the full numbers in a little bit. But from what I could see on the headline numbers and the straight instant, you know, reaction from earnings, I was like, yeah, you know, for a company that's trading down at historical lows, 15 times earnings or forward earnings, looks pretty steady. And then I look at the share price and you're down 7%, and it's like, okay, it's a bit strange. You know, Shopify, basically flat after hours, but you know, these guys came out with a big beat on the EPS, you know, nearly over double what was expected on the EPS. Revenue, a decent beat as well, growing at a lot faster rates than what we thought they were going to do this year. And you look at that thinking, you know, obviously a richer valuation, but you know, good beat by Shopify, and then not really much reaction over there. And then I was looking at the likes of Mercado Libre, you know, the last one here, and it was up 4% after hours. So you'd go, oh, well, it's up. But then you look at the numbers that Mercado Libre just put in, and I'm going to save the best numbers to last, but you know, revenue up 32% year over year, beat by 150 million. I mean, total payment volumes again, look at that, 96% up year over year. But look at this, you know, one of the key metrics you look at now with Mercado Libre is profitability, and GAAP EPS of $5.16, beat by 0.88. I mean, that's insane. That is insane. That's over a 15% beat on EPS. That's insane. That is, you know, obviously the big thing that, and the struggle to forecast for Mercado Libre, because they don't really give much guidance on their EPS side of it. So Mercado Libre tend to always come in a little bit higher, and also payment volumes are driving up profitability a lot more with it growing so fast now. So it is always hard for the analysts to kind of judge it here. But even so, you know, when you're coming in with them sort of beats and them sort of numbers, that's amazing. That's really, really good beats. And you look at that going 4% for that beat. You know, your EPS is 15% higher than what's expected. You imagine if that was 15% lower, potentially what the drop would be on the share price. 15% higher, you know, over 15% higher, and it's only up that much. It's crazy. Like, unfortunately, you know, I was looking at some of these reactions on earnings and I was going, they just don't make sense. But sometimes you got to take them into context of the day it's just come off. And unfortunately for a lot of these stocks, you look at the day they've just come off. You come off a day where there was kind of a little bit of sell-off, a little bit of fear put into the market. And unfortunately, that's why I always look at earnings. I always look at earnings before I look at share prices. I look at PayPal's earnings and I went, decent. What do I think the share price should be? Maybe up 1 or 2% after hours, down. Okay, that's an overreaction, could be a buying opportunity. Shopify, flat, decent earnings, okay. Maybe not a buying opportunity because it's not down, but probably should have been a bit higher. Mercado Libre, up 4%. I think it's just jumped up to 5%. You look at these earnings, okay, they're absolutely smashing it. If it's not going to get rewarded on the share price or not getting rewarded as what it should be, could be a buying opportunity, and that's what I look at. But sometimes as well, when you do look at these earnings, I don't always like to look straight away at the context of the share price because they can be really misleading. And I think that was an example right there where some of these companies brought out decent earnings, but because depending on what the day has happened, it can be tainted on the share price, and I think you saw that with what happened yesterday anyway. So yeah, just a couple of stories there, or things that were going on in the market I wanted to just kind of show you guys. So I hope you enjoyed the video as always, guys. If you could hit that like button, if you're not here, subscribe. I'll catch you in a bit.